So it's been a while. I did a new video about some technical trading, some things I look at in the market, some trades I take. And I thought it would be good today to show you a few trades I took recently and how I'm able to catch the trend from reversal trading. I'll show you how that works in details. Let's jump on the chart right away. Alright, cool. So what I want to show you here today is a trade I took on Australian Japanese yen recently. So like you know, I'm trading mainly reversals, but I also like to trade the first pullback with the same strategy as my reversal. It works really well. So the principle is that when price breaks out of a range, so you have your range over here, price is between the range, and then break out of the range, then I like to trade the first pullback toward that zone again. And I'm shorting here on that kind of range. And this proves to be really reliable. And I'll show you how that works really in detail. So like you know, I've talked about this before, I trade primarily the Bollinger Band. I have a strategy that I enter the market when price breaks the Bollinger Band and makes an engulfing candle, or a candle that closes below the low of the previous candlestick, or above the high if you want to buy. So how this works is I'll look on a daily chart, I'll look at these ranges. Now here the range is not so clear on a daily chart, but if you look at a forward chart, you'll see these ranges here clearly on the chart. So we've got one over here where price went to the top, here at 86, came back down, 84.5, went back up, 86, and so on, until they break the range over here. And then price again made this second range. So the way we define a range is two similar lows. So if you want to be trending, actually you have to have higher highs and higher lows, or lower highs and lower lows. We need to have both. In that case, we have a low over here. Then we have a high that's lower, so that's good. But then you have a low here that's higher than before, so we cannot have a trend here. Therefore, I'll look at a sideways market. I'll look for price to hit the same level as here before, and I want to short at that level. Okay, that's how I look at my ranges in the market. Now, what this means is that we'll go on lower time frame. We won't trade the same thing here on a big time frame like a daily chart, because that's a forward chart. That's okay, that's decent, right? But I still want to go on lower time frames. So what I'll do is I'll go on a 1 hour chart or forward chart. Now I'll look for a setup that's very, very simple. It's a engulfing candle that breaks the Bollinger Band. So we'll add the Bollinger Band here. I usually have an indicator on my chart that makes it easier. We'll just actually go there because that's gonna be easier. So here we have the setups that are shown with these triangle here. A blue triangle means it's a Bollinger Band setup, and a red triangle means it's a engulfing candle, simply. So we have a buy when it's green, we have a sell when it's red, but I don't use them. They're just here for reference. In other markets, I use them. Now we want to look at these blue setups. Okay, so we'll just disable them over here, this one. And now we only have the engulfing candle that break the Bollinger Band. That's the one I want to trade. If you are in a range like this, where we were before, I'm looking to sell at the top or buy at the bottom. Now this one is no way to catch it, right? Because price going down, we don't see what's happening. We see it's a downtrend. We don't see anything else. So we cannot catch that. Now this one, when price makes a lower high, fail to break the lower lows and makes a higher high, then we can start to catch this. Okay, that's something I want to trade because we are still going within the trend. This is still a downtrend technically, but we are in a consolidation over here. So what I'm looking for is big bullish candlestick that breaks the Bollinger Band, and engulfing candle just after this. And then what I want to see is I want to see price, first of all, closing beyond the low of the previous candlestick. So we have that over here. It's kind of hard to see, but we have that here. Price closes here, and the wick of the other one is a bit above that. So it closes beyond the low of the previous candlestick. And then you have a small wick here. I want to enter the market below the low of the engulfing candle when it's a sell setup. Okay, so it has to be going a little bit below the low on the next candlestick, which it does. Like you can see here, we have our low that's over here, and we have our engulfing candle low that's over here, so a bit above. So we are good. Price on the next candlestick, even though it's a bullish candlestick with a big wick, went below the low. So that's good. So we put our sell order here. Now in terms of take profits, you've got a few different options. First of all, the stop loss will go beyond the high of the engulfing candle or beyond the range. You see here, it's actually both. It's beyond the range and beyond the high of the engulfing candle. Now, in terms of take profit, you've got two choices, right? You can do a fixed take profit, which I tend to do a lot. But here, because we have our range that's really, really tight, like this is like really small. I cannot aim for a 2-to-1, 3-to-1. It's just impossible. Price won't go there, okay, or it's less likely to go there. So what I did is I put my take profit close to the low of the range. Actually, the low of the range is over here. Take profit goes over here a bit before that. So in that case, the market reaches take profit really fast, really quickly, and then we had this pullback over here. So we break the range. We have a nice breakout here. You could trade breakout if you want. That's good too. That's totally fine. But then we have an other way to enter. Now, I like to combine both time frame, the 1 hour chart and the 4 hour chart, because that gives you more setup. Sometimes you have a setup on the 1 hour chart, not on the 4 hour chart, or the opposite. You have one on the 4 hour chart, but not on the 1 hour chart. So we need to combine both in that case. And what I'm looking for is I'm looking for the first pullback on that market. Once we break the range, okay, the first pullback, we want to see that. So I'm going on a 1 hour chart, and we have the same setup here on a 1 hour chart, which is insane. Because we just closed this trade here not long ago, and now we're already in the second trade. See how price goes back down, pulls back. Okay, kind of not so much conviction here, just comes back down a little bit, goes back up, and then we have our break of the Bollinger Band and engulfing candle. Okay, this one is a lot smaller than the previous setup. I agree, for sure, for sure. But see how price pushed back down. Again, same principle. I put my entry below the low. So price needs to break the low on the next candlestick for me to enter the trade. Stop loss beyond the high. In that case, we have no zone, we have no resistance area because we are in a trend now. And reward to risk, now here we can be more flexible. Now because that's a trend, I can use my typical take profit of 3 to 1. So my take profits are one at 1 to 1 and one at 3 to 1. So 1 to 1 will be around here, achieve next candlestick, that's it. And then we are pretty much break even if price pulls back, that's fine. And then second take profit 3 to 1. Here's 2.98, it's around there, 3 to 1. And then we're good. Okay, so then we are in this trade, we close the trade, price pulls back, but we don't care from here. So you can see how we combine the reversal to the trend trade after the first pullback. This is a really powerful technique because let's say you miss the setup. If for some reason you're sleeping or you're at work or whatever, you miss that first setup. Okay, you miss this one over here. And that's on a 4 hour chart, by the way, so not on the 1 hour chart. It looks different. Well, then you should have a way to enter the market when you come back here later. Okay, that was at my 4 p.m. This one was taken by the algo because I was still around noon or 1 p.m. So still fine, the day before, or 18, so 3 days after. So that's what it looks like, right? That's pretty good. So we're able to combine some reversal trading here or first range with this one over here. Now you might be wondering, well, why not just take a big entry, big order, and make a big take profit? So instead of looking for like that here at 1.34, that's dumb, that's too small, look for like a 5R. Sure, you could. Like, see how price moves here up to here. Like that's a 3R because you have a big stop loss in that case. Well, yeah, sure, we could do it, right? But the issue is, how do we know that price will break out from the range? Because most of the time, what price will do here in that case, and it's never going to always break out like this. What price will do most of the time is go in your direction a little bit. Then once you get here in the low of the range, go back up, be choppy a little bit more, and go back up to the top of the range. Now, if it happens, which is most of the case, most of the time it happens like this, then why do you want to have a big take profit? It's pointless, right? And that's why this second entry with the pullback here is really, really powerful, because we can benefit from both. The reversal, a small reward to risk, but more accurate, and then we enter on the trend. A bigger take profit, so bigger reward to risk, and sometimes a bit less accurate. So we can benefit from both in that case. That's just one example. I have plenty like this I can show you if you want. Leave me your comments below as always in the comment section. I want to hear if you like those kind of videos or not. Maybe you don't like them. Maybe you think that technicals are boring. I don't know. You tell me in the comment section. If you want to see more like this, I'll do more like this. I promise. Just let me know in the comment section below. Check out these videos to watch next. And I'll catch you back here in the next video pretty soon. Ciao.